Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for futures and Forex. This is where we put our game plan together for tomorrow on all of our big six markets. It's going to be gold, crude oil, and the Dow, as well as the Forex markets, the Euro USD, the pound dollar, and the dollar yen. Now, before we go jumping on into everything here, make sure to swing on over to the website and scroll on down so you can click on the Join the Daily Outlook newsletter. That will get you on our mailing list so that you never miss when this comes out and you'll be ready to rock and roll, as well as be updated on any new information that's going on with the site. So make sure to sign up for there. And then also, while you're there, every morning we post our live trader morning prep levels. That will give you all of the major levels of support and resistance that we're taking a look at that day so that you are prepared for that as well. So first of all, let's take a look at gold. Gold, it's mostly range bound. I mean, all things considered, mostly range bound. Big failure off the highs, big move down, and then all the way back up again. So this range, we're zooming out a little bit. We're kind of continuing what we saw yesterday afternoon. We got a little bit stuck here. They tried breaking down through that major area of support that we were talking about, the big target area from yesterday's outlook. And since then, we really haven't gone anywhere. We're just in one big range. Now, the big area that I would still really like to see is to the sell side. The sellers definitely have the bias here, but given how two-sided this is, you should be able to get both sides of trade going with relative ease, right? Be a little bit careful, of course, with all the stuff that's going on tomorrow, but we should be able to see a sell side bias, but the ability to go on both sides of trade. So really what I would like to see is a failure above the highs here at 1206.4. We're in a reversal area right now. Major inventory up here from earlier today through here, as well as prior, and we're finding more resistance here once again. So I would like to see sellers attempt to come in, but we are very bullish. We're staying above the moving average. Buyers are buying into the moving average again. So I would rather wait to find a failure off of the highs and then look to sell back down for possible profit targets below. If we are going to continue to the upside, it wouldn't be a bad idea to see at least a little bit of a pullback. Now, again, this may be all you get, but a nice little pullback to retest that prior breakout point. You can see all of the chop and back and forth we had inside this area. To see us come back to that area, find buyers supporting it right at the bottom of that channel, and then shove the market back up from there. So you really have the option of taking either side of trade. Sellers are going to be looking to sell off of the highs for a move down, and buyers are going to be looking for a pullback to keep the move going up. And honestly, right now, given the context, I think both are applicable. Over on crude oil, now crude oil still a range-bound mess, much more so than we saw on gold. Now crude oil is significantly more range-bound. We started off with a big drive lower, and it made its way back up to a new high, completely failed at the high, dumped back down to the low. So very two-sided once again. Moving higher, then to the lows, then to the highs, then to the lows. We're probably going to end up finding our way back up to the highs at some point. Now we did have inventories come out today at 11, just due to the holiday that we had on Monday. It pushed it off a day, which came out as a nice little build. Not what they were expecting. They were forecasting a negative, but it came out a positive. So it reacted a little bit bearish to that move down. But all things considered, just like we saw in gold, fairly both ends of trade taking place. Buyers are able to make money, sellers are able to make money. Both sides have a bias in this. So what does that tell us? Well, we know that right now the bears are in control, so I would rather be selling. But in the short term, it's pretty obvious that we're putting in a stiff area of support down here between 51.96 and 87. So given that sentiment, what I would like to see is the market to attempt to break out down, possible sell for a scalp, but then looking to buy into that area. Maybe it bounces here, maybe it traps low. Either way, looking for it to go back up. We're still making lower highs, and we are forming a little bit of a wedge here, so the objective for something like that would just be a retest of the wedge. But either way, looking to sell currently, maybe a trap high above 52.30, or if they're really nice, cycle back up to the range highs. Otherwise, we're just looking to buy the lows. So both sides are applicable here as well. On the Dow, a little bit of a different story here. We've got a fairly large move going on where we can see a nice bear channel working its way down. Found a huge amount of inventory at the bottom of that channel, and that was between 622 and 607. Not that it really matters right now, being 100 ticks away from it, but it's obvious that the sellers got a little overzealous. They closed outside of the bottom of the channel, and the buyers immediately swept back in and shoved the market higher. Now, that sweep back to the upside, that shows us, well, we had an overshoot down here. we're probably going to see it overshoot the highs as well. And that tells us, well, we may be looking for a move back to the downside if this is more of a type of exhaustion, big bear move at the end of the day. Same thing happened back here. We're probably going to see the buyers attempt to jog it higher. But like we saw back here, they weren't able to go much further. If you measured this up, they only went about 50% of that distance before they found some resistance back down. So in this case, if we're looking at the same thing, this whole move down is likely that exhaustive type move. We're looking for it to go about half that distance up, which puts us right around, that 19,720 area. That's also the prior swing high up here, actually prior several swing highs, and just a lot of areas of resistance up there. So generally, what I would rather be doing right now is selling, assuming that this move up is going to be a failure, but the buyers obviously own the short term, so be very careful jumping in too early to a sell. You would rather be a buyer right now and be a seller a little bit later just to play it safe. Now, the big area of interest that we were looking at, we had the breakdown of that prior major swing. They just slammed through it. They came back to it, tried finding it as resistance, and pushed down. That tells us that sellers did enter trades there. They even did it again. So we know that a lot of sellers are probably stuck right here, and now it's breaking higher. So generally what tends to happen is you're going to get the breakout move above, see them pull back to find it as support, because now all the sellers want to get out at break even, and that should shove the market back up once again. So at the moment, I would like to buy a pullback. In the longer term, looking to sell, but with some good proof that the sellers are coming in. Over on the Forex world of things here, we have the EURUSD grinding its way back up after that big drop lower earlier this morning. This grind higher is forming more of a wedge than anything else. And did somebody say wedge? Here's another one for you. Getting a little bit of a pennant up here. Big spike higher. We're seeing them kind of pennant out a little bit. I wouldn't mind seeing a nice breakout to the upside to get one more drive up and finish that move. Notice how they missed the top of the channel right there? It wouldn't be a bad thing to see them go back up and test it to actually finish the job. And that's the major objective. Now, past that, the major objective above that would be the major high that formed earlier this morning. It's around 67, 68 or so, if we can get that going. So, a little bit of time here, but we may find a nice little buy opportunity to shove it higher, get back to that high, finish the objective off up here, and then look for potential selling back down. But either way, the buyers own the market at this point in time in the long term, mostly range bound, looking to sell high, buy low, but the buyers own the short term, and that's the direction that we have to look to go. On the pound dollar, a little bit worse, right? A little bit more range bound here. We are seeing kind of the same formation here with a small, not as pretty as the EURUSD, but a small little pennant formation that is breaking higher. We may find buyers try to drive the market up. But one really big thing stands out here. This is much choppier, right? Lots and lots of back and forth going on here on the pound dollar. We cycled off the highs down to the lows, attempted to go back up, made a new low, tried to go up again, tried to make a new low, and now we pushed back up and made a new high. So all of this back and forth tells us that we're at the high of a possible range. We need to be looking to be sellers up here. Here's the thing. If we zoom out a little bit, we can see this is still a range that's been going on for the past few days now, right? I mean, we arguably are still stuck in this same range that we have going through here. We're not quite at the highs yet, so there could be a little bit more upward distance before we start finding some selling pressure, but the overall bias is up. We have a very strong bull move up. This pullback looks like it couldn't even make it halfway back if you measure this whole thing up. Looks like it came about maybe a third, a little over a third back, and now we're starting to see it continue to the upside. So zooming really far out tells us, yeah, we may want to be sellers at the top of a range, but we could easily see a nice breakout pullback and then run to a new high, getting back up into that 24,138 area, which could be a very nice run indeed. So lots of interesting formations here on the pound dollar. Obviously, we're at the high of a range we would rather sell, but in the grand scheme of things, I would almost rather look to buy a pullback. Right now, that pullback would be between 23,175 to 23,124. And if they want to drop back down to this earlier area of major support, I wouldn't mind being a buyer down there either. And then finally, wrapping things up on the dollar yen. The dollar yen is usually the inverse pair. We're seeing it go down a little bit. Now, the bearishness that we're getting, that's off the back of a big move up, and they failed at the highs. We saw them try to push up. Buyers likely bought into that pullback, and good reason to, right? There's a really nice possible continuation or a probability of continuation to retest the highs. But once it retested the high, it completely fell apart, right? Immediate failure there. Couldn't even test the high, failed back down. Sellers failed to go, back up to the highs, failed to go, and now the sellers finally took over. The buyers just gave up. With the buyers giving up, we have a large area of rising support from point A to B, expanding that out a little further, and we can see that we are attempting to find some bouncing off of this, but really we've already kind of cracked it right there. And if anything, we may just be forming a small little wedge, kind of reminiscent of the rest of the currency pairs here, and then we could be looking for a quick snap higher, maybe a trap into our area of once support turned resistance, find some selling pressure there and drive it back down, or we may just break down and continue going to the downside. Either way, we definitely want to be sellers. Whether or not we're selling right now or selling a better price is up to the user's preference, but potentially some pretty good movement. Now, tomorrow, it is Inauguration Day tomorrow, right? So don't lose sight of that. If we look at the news for tomorrow, right there, I can't outline this one enough, right? I'll put tons of boxes around it. At 12 o'clock, U.S. President Trump speaks. And notice how it doesn't say President-elect? That's a big clue, right? Tomorrow is going to be a big, big day in the markets. Now, if you're trading the Canadian dollar, you do have some big news as well, and the pound has some big news earlier in the morning. But the big thing that pretty much the world is going to be watching tomorrow is going to be at noon with President Trump hitting the microphone. So be very careful tomorrow. I'm expecting tomorrow to be one of two things. Absolutely abysmally slow in the morning because everybody's waiting for Trump to hit, or very fast, abrupt, quick snap movements in the morning because everybody they have to get their trades on. They got to get it done before all of this happens. So it could be a really whippy day tomorrow. Be very careful. I know a lot of traders I've talked to already aren't going to be trading tomorrow. I can't really say I blame them. I will be trading tomorrow, but I'm going to be trading very guarded. I'm not going to be taking the normal risks that I would, be being very, very particular in the types of setups that we're going to be keeping an eye on. So that's going to do it for this one. Hopefully you found it useful. Hopefully you found it helpful, and maybe it'll give you something to look forward to for tomorrow. As per the usual, make the plan, trade the plan, follow your rules, and you will be A-okay. Until tomorrow, we will see you all later.